Because if they taught you that the Fiat Ponzi existed, no one would deposit their money in the commercial banks, would they? They'd be like, okay, I'm teaching all these kids through university that they shouldn't trust the financial system. Oh my goodness.
Welcome to the Daily Crypto. The dollar, like the rest of fiat, has many problems. It can be printed excessively, therefore always at risk of losing a lot of its value in one fell swoop. You might ask, is there a better alternative? Is Bitcoin really the answer? Can we truly be immune to financial disasters? Keep watching to find out as we answer these questions with a 35-year veteran of credit trading that earned his stripes in junk bond market trading as a credit risk manager, witnessing 4 major crises in his career and now co-founder of Looking Glass, Greg Foss. Without wasting any time, let's dive straight into it. What is the problem with fiat? Foss explains the leveraging system of commercial banks.
The problem with the Fiat Ponzi starts with the commercial banking system. And the reason that's a problem is because commercial banks are 25 times levered to their capital base, which is to say that for every $100 of loans a bank makes, only $4 to $6 is equity capital or risk absorbing capital, and the other $94 to $96 is your depositor's money or subordinated debt. So how often do you think a bank makes a loan and the value of that loan declines by more than $6? Well, it happens all the time, okay? If you've ever traded debt, which I've done for 35 years, you know that the prices of bonds fall by far more than $6 over the economic cycle, whether it's because of credit risk, primarily because of credit risk, or it's because of changing interest expectations on behalf of the central banks globally. Bond prices are volatile. Very simply, Leah, commercial banks need inflation in order for their collateral to increase in value to compensate for their undercapitalization. That is the Fiat Ponzi in a nutshell. After 35 years, I finally found Bitcoin. Bitcoin is the only digital asset that solves the Fiat Ponzi. Very simple.
Does this mean the bankers have always known it was some kind of a Ponzi? Foss responds saying there was nothing coercive there. It was an open secret. It is just the way the commercial banking system is. Hear what Foss adds to that.
About over 100 years ago, right? He was quoted as saying, if the average American understood how the commercial banking system works, there'd be a revolution in the morning. So, it's a fact of the structure of the fiat system where you have commercial banks that need to have an incredible amount of leverage to earn proper returns for their equity holders. It basically puts the system at risk of cyclical failure. And notice that the first one, 1988, was followed 10 years later. 1998 was followed 10 years later. 2008 was followed 10 years later. 2020. Okay? The depths of these crises get more severe because the central banks bail out the system and kick the can down the road. And consequently, we are in a spiral, a DEBT spiral that can never be repaid, and thus currency debasing is 100% certain.
Could it be that Foss believes in destruction by design? The veteran responds to that.
Designed this way because it's always been designed this way until there's an alternative. And that's why I'm so excited about building a parallel network that's built on different foundations totally.
So concerning these 10-year cycles he mentioned, how is the most recent crash, the COVID crash, comparable to the other previous financial crises? Is there a connection?
Well, I guess what I should have said, it was a financial crisis in the response by the central bank. So, for example, what happened in 2020 that never happened before was that the Federal Reserve said they would buy high yield bonds. Okay. That was the first ever in history that the Fed came out and said they would buy high yield bonds. Why did they say that? Very simply because there were 4 different US based credits. They are General Electric, General Motors, Ford, and AT&T that were on the cusp of being downgraded from investment grade, a subjective investment guideline for bondholders, from investment grade to high yield. The combined debt of those four companies is bigger than the existing high yield market as a whole. So if they had been downgraded into the high yield market and caused forced selling by the investment grade sellers that have to sell their bonds into a high yield market, it would have overwhelmed the high yield market to the extent that it would have caused a collapse of the equity market, because the bond guys rank as a prior claim in the capital structure. Well, guess what guys like me do when you own a bunch of General Electric debt that is becoming more credit risky? You go out and you short the common stock.
Foss adds that although the 2020 crash was a response to a medical crisis, the financial crisis was more of the same. Watch.
Get involved, print money, try and contain the contagion, because as high yield goes, so goes equity markets. So what the Fed was actually trying to do was control volatility by backstopping the high yield market, okay? And it worked to an extent. It regained confidence. That's all it's about, is the confidence, the liquidity of the system. They don't care so much what the price is, as long as it still moves, meaning it trades. What really happens in every crisis is things gum up. There's no trading, there's no liquidity. Things fall by literally 20 points, 20 bond points, which is a 20% drop in the price of a bond. Let me tell you, that's not supposed to happen. But bringing it right back to the banking system, if a bond drops by 20 points, the same thing happens with the loan. Okay, the two things are pari passu, meaning they rank exactly the same in the credit structure for an investment grade bond. If General Electric debt fell by 20 points, so did the bank loan. And imagine what happens with the bank loan. That means all the banks that only have $6 of capital, they just lost $20. Uh-oh. What does that mean? It means that the financial system is insolvent again.
The renowned credit risk manager explains that sitting in a risk chair on the job, getting work done is a very important part of education, not merely studying efficient market theories and whatnot. That brings us to Looking Glass, the company he co-founded. How did Greg Foss begin with Bitcoin and Looking Glass?
And that's because I wrote an article. The genesis of that was I wrote an article that basically detailed my 30-year history in the credit markets. And it was submitted to Bitcoin Magazine, and it was quite well received. And what happened, though, there were a lot of readers that are like, oh my God, I needed to open up a Google Doc to see what Foss was talking about the whole time. Because I believe every single credit manager in the world needs to own Bitcoin as insurance on the credit portfolio, meaning on the Fiat Ponzi. Okay, so I wrote those thoughts in an article. That's one of the reasons I got invited to speak at the first Bitcoin Miami conference, and it was well received. But it was written, and I wrote it on purpose for portfolio managers, credit portfolio managers. We're a weird bunch. Okay, we're a bunch of square pegs in a round hole a lot of times, you know. But at the end of the day, they said, "Can you write it in layman's language?" And I partnered with the group at Looking Glass Education to do that. We did the first article. Again, it was quite well received. And we said, well, why don't we do this on a regular basis? So really now, I'm very proud to be part of it, but I am not the one running it.
How will Bitcoin be embraced as the world's reserve currency, with more countries adopting it or something like the gold standard? What exactly will the adoption be like? He answers.
So let's talk asset management. That will be a diversification strategy within the asset management silos, which include pension funds, university endowments, mutual funds, ETFs, etc. But then if you take it a level higher, one of the reasons they might want to get involved is because they see countries like El Salvador doing what El Salvador did and bringing 44 other central bankers from small countries, albeit. But imagine if a country like Canada, my hometown or home country, decided to use Bitcoin to price our oil and natural gas. Well, I think it makes sense as an engineer. And once that happens, The adoption continues across the world. Now, I'm not saying that Canada is going to do this, but a smart sovereign nation that is energy resource rich, maybe Russia, for example, because they don't have a love on for the US petrodollar right now. Can you imagine if they start pricing their energy in Bitcoin? And then the asset managers say, damn, I got to get me some of that. Because I think of Bitcoin as digital energy, not digital gold. So that's why I have a problem with the inflation narrative.
Finally, what is happening with Bitcoin mining right now? Foss weighs in on this with his expert opinion.
I tend to look at businesses as their strengths and weaknesses. And if you don't control your input costs, okay, and you don't control your output revenue because that's set by the market, that's a very difficult business. So you're like at the funnel of input. Okay? You have your energy input, you have your nozzle, and then you have your output, which could be distribution. It could be all the things that set price on the top of the funnel. You're just this function in here that if you don't control your power, you can get squeezed from both sides. And that's exactly what's happening right now in the Bitcoin mining space. So I would argue, and I'm involved in a company in Canada called Validus Power, where we own our power assets. We own 400 megawatts of natural gas-fired power plants. We host some Bitcoin miners there, but we own the power. The miner doesn't own the power. Now, over time, you just saw Duke Energy, for example, a very large 50 gigawatt company in the USA, studying Bitcoin and mining Bitcoin using their power assets.
Thanks for watching this video. What do you think about Greg Foss's predictions on Bitcoin price? Let us know what you think in the comment section below. Don't forget to smash the like button, share our video with your friends and family, plus subscribe to our YouTube channel. See you on the next one. Until then, bye.